Meet Bot. Bot's family is growing and they need a house to live in. To buy a new house, they can start saving money every month. This way, in around 10 years, they will have enough money to afford a house. However, the house prices may go up by that time and they would need to continue saving longer to get their dream house. Needless to say, while saving money, they still need to live somewhere and spend more money on rent or live with parents and other relatives as they wait to save enough to buy their own house. Another option is to borrow money and start living in their new house now and pay the loan over an extended period of time. Bot can also use the borrowed money for other important investments that he cannot afford on his current income. But if he borrows, he needs to pay interest on the loan. If the interest rates are high and the repayment period is short, he will not be able to pay off his loans. That's why loan terms are a key criterion when deciding to take out a loan. The interest rate should be considered together with his ability to repay the debt from his future income. Just like Bot, Mongolia also needs to seriously consider the loan terms when it decides to borrow money, such as interest rates and repayment periods, or maturity. This way, the country's debt can be kept at a sustainable level while bringing in external financing to support development. Development institutions, such as the World Bank Group, provide loans to countries to finance their much-needed investments for a better future. Until now, Mongolia has been receiving two types of financing from the World Bank: credits from the International Development Association, or IDA, or loans from the International Bank for Reconstruction and Development, or IBRD. IDA provides credits with no or very low interest rates to the least developed countries in the world. Right now, IDA credits to Mongolia carry a maturity of 30 years with a 5-year grace period, which means Mongolia does not need to pay loan principal for the first 5 years. Annual interest rates and service fees for IDA credits in Mongolia add up to 2%. Because Mongolia has reached middle-income status, Mongolia will graduate from IDA, which provides financing only to low-income countries. Starting from July 2020, Mongolia will be eligible to borrow exclusively from IBRD. IBRD provides low-interest loans to middle-income countries at rates well below commercial rates. Mongolia's annual interest rate on IBRD loans is currently less than 2%. On top of this, Mongolia pays a commitment fee of 0.25% a year on the committed amount. Compared to IDA, IBRD funds are more flexible to use as countries can choose the repayment periods themselves. Mongolia chose to repay the IBRD loans for 30 years with 5 years grace period. The loans from the World Bank help the country build schools, hospitals, create jobs, develop exports of national products, distribute heating services to households, and boost livestock productivity so that people like Bot all across Mongolia can have a better future.